So, hello everybody out there. I would like to just ask into the round if you can hear me. I would like to ask you to just give me a short note in the chat. Okay, great. Yes, then I would like to very welcome you to our LocationPoint webinar today. Great to have you on board. Good evening to all the people here in Europe. Good afternoon to the guys in US, and good morning to our Australian visitors. Yes, I think it's going to be a quite interesting webinar today. I'm going to show you, let's say, a new kind of trading. Yes, basically it's a new kind of trading. It's a trading style I have developed, but it's something new in the market. And when you Google for LocationPoint Trading, you won't find anything there, because basically this name was created by me, but it's not something, a mysterious trading style which is has some, how to say, some outcome from some back testings or something like this. It's something which you really can view and watch in the markets. My name is Gilbert Kreuzthaler. I'm the CEO of AgenaTrader.com. I'm here in Vienna, and yes, basically my background is that I was working for a very long time in the IT area as a software developer, as a requirements manager and a project manager for various financial companies in the financial industry. But I'm also a trader. I fell into trading at around 1999 and in intraday trading at about 2006, 2007, and I was also trading in a prop trading room. And somehow the knowledge which I've got out of the prop trading room was the basis for the LocationPoint trading. Yes, I just would like to start with the webinar now. I have prepared here an agenda where we start somehow about the entries in LocationPoint trading. What is a location point? What are location points, to get a better understanding? The different types of location points I will try to show you. The entry retracement formations in the charts. Which entries there are there, because there are different entry formations, entry signals. What you can find in LocationPoint trading is the so-called 8 train, the 20 train, the Tramp Oline. This both I will show you in detail how they are working. There is the stairways setup. There is a JoJo 130-200, and there is a red and green bar wipeout signal, basically. So there are 6 different signals which are somehow related to LocationPoint trading. Sorry. So, okay, now it's working. So good. Thank you for telling me. I think now you see my mouse moving. So basically, here you see location points. What is it? The types of the different location points, the entry retracement formations, which entries are there. It's the 8 train, the 20 train, the Tramp Oline, the stairways, the JoJo 130-200, and the red and green bar wipeout. Okay, so then the next is how the trade management is working. which different time frames we are using, in which time frames the location point signals are working, what stops make sense for location point signals, what is the initial stop, what is the trailing, the hard and soft stop. So if people are already using AgenaTrader, they know might know already the difference between hard and soft stop. We will I will explain it later on. Break-even stop, which is also very interesting to get out of the risk in trading. How to determine targets, the interplay, the interaction of different time frames. I also have some words to tell you about this, which is very important in location point trading, that we are working with different time frames at the same time. The entry and targets to change into higher time frames, to find, to confirm entries and to find targets. And I'm also telling you something about the Holy Grail, which is, you will see afterwards, which is nothing else than order sizing. And so the theoretical part will take about 45 minutes, and afterwards we are going into a practice part into AgenaTrader. Yes, and also I would say question and answer are going to be answered at the end of the webinar. There will just, if you have some questions, just please type them in. I will reflect to your questions afterwards when I'm done with the theoretical part, and afterwards after the practicing part of this webinar. Okay, good. Let's start. So, what tools does location point trading use? So basically, we are using different moving averages. We are using deviations for location point trading. We are using specific time frames, support and resistance areas, candle formations, candle formations and candle retracements, and indicator or certain positions in the chart which are derived directly from the chart. So basically we are not using any indicators or something like this which are somehow mathematical calculations out of the chart like an RSI or something like this. So everything what we are using in location point trading is directly derived from the chart, like a moving average, like deviations, like the Bollinger Bands and something like this. So basically this is what we are using for location point trading as tools, and specifically we are using the SMA 8, the SMA 20, the Bollinger Outer Bands, the EMA 130, the SMA 200, the climatic distance indicator. This is a very special indicator. I will explain to you this indicator later on. This indicator was developed by myself, especially for the location point trading, and then we are also looking for support and resistance areas in location point trading. So as you already see here, there is just these indicators. They are directly coming out of the chart. There are no oscillators or something like this. Just the climatic distance is an oscillator, but it's also coming directly out of the chart, but I will explain it later on. Okay, so basically these are the tools what we are using for location points. We are not looking for if the SMA is crossing the SMA 20 or something like this. What we are doing in location point trading is how the market is reacting on these different indicators. So this is that when the market is reacting on one of these indicators, then more or less it has somehow is a signal. It has a certain meaning of how the market could react or is reacting. Okay, so basically these are the different tools, indicators, and here we are already in the first chart where you see basically all these indicators I have mentioned before also in the chart. And if you look here in this chart, which is just a chart, it's not a specific one, I just took any chart and tried to find some reactions, location point reactions in the chart. And as you see here, I have marked them with these blue circles here, that in this, for example, here we have the red line is always the SMA 8. The green line is always the SMA 20. The blue line is the EMA 130, as you see them also here. Then the orange line is the SMA 200, and then you see here the different support and resistance areas. So all these tools are, of course, they are available in the chart, in the basic charting of AgenaTrader. But just where you see here these different circles here, you see always reactions on in the market. So basically, you see here this is a retracement. What the retracement is, I will tell you later on. But here you see a reaction that out of this SMA 8 there is a reaction in the market. Then we have here the SMA 200 where we see a reaction. We see here the AMA 130 where is a reaction. We see here the falling outer bands where is a reaction. Here SMA 20. Then here the support and resistance areas. And basically wherever they are occurring, we have a certain specific name for the different setups, for the different signals. So we are talking here about the H train, we are talking here about the yo-yo. This is also might be a yo-yo, not a really a good one, but here at least we see a reaction. We're talking about here about the stairway. Here there is a Tramp Oline setup. Here this is a wipeout setup. Here we have a yo-yo. We have here an 8 train, a 20 train, a 20 train. So if you just see, this is a very short excerpt of a chart with a few candles there, and you see already that there are many different occurrences, many different retracements in the charts, where every of this reaction, all of these reactions have a certain explanation. I will explain the 20 train and the Tramp Oline setup in detail today. Everything else would be too much. But this is also something here, you see also the climatic indicator. And basically what the location point trading is based on the theory, not only in the theory, basically it's proven that the market is basically always toggling around the SMA 20. So here it goes up, comes back somehow to the SMA 20. Here it just goes to the other side, comes back, has always again reactions, leaves the SMA 20 to a certain extent, comes back to the SMA 20, goes through, and so on. So basically there's always somehow that the market is going, is just trying to access the SMA 20 and is toggling around the SMA 20. And what they have done here is, this is the climatic distance indicator, that the black line in the middle basically is the flat SMA 20. So basically this is just the SMA 20, which is flat, which is the same line like here. And what we are doing here is basically, you see the green line. The green line is the median of the market. So basically, when the market is going far away from the SMA 20, like you see here, because we are calculating from here, you see also that here there is the market, we call it, it's climatic. It's quite far away from the SMA 20, and the market at a certain point will try to get back to the SMA 20 again. So this is just something what you can see here, what you can read out of this climatic climatic distance indicator. The red lines is more or less a threshold from a historical calculation of the moves away from the SMA 20. So basically, whenever the market goes out of this red line here, above or below, there is somehow, there might be a reaction from the market that the market is going back to the SMA 20. But it has no real signal here. Does not mean when you're climatic that the market needs to go back immediately to the SMA 20. It's just a sign for calculating just to know that we are somehow far away in average to that what happened in the past. Okay, so this is basically the climatic indicator, which has quite a strong is a strong tool also for location point trading. Okay. So which retracement types we are talking about? So basically there is the so-called single bar retracement. The single bar retracement is basically a single bar where we always starting to interpret it from the open quote, basically, that here basically the market opens in this period. We have here a down move and we have a back move here to a certain extent. So basically this means for us such a candle is interesting when the distance between the open and the low back to the close quote is more than 62% of the whole move starting from the open quote. Of course, the dot tail of this single bar should not be too long because then it's not a real retracement. So this should be a short candle, a short top tail with a long bottom tail, basically. And if the retracement here is more than 62% from the open to the low to back to the close, then we are talking about a single retracement. And this is, of course, this is a strong signal. I mean, we know somehow from the Japanese candlestick, this might be a hammer or something like this. So basically, yes, this is something similar. But of course, there is also the same thing with a green single bar retracement. This is a red single bar retracement. This is a green single bar retracement, where we have the open quote here, where the open price here, the market goes down here, retraces back and has more than 100% retracement. Of course, this candle has a stronger effect for us than a red one, because here the back move was not that big. And of course, the same, it works also for the short candles. So if you're looking for a short signal for a short retracement, it's the same vice versa. We have a open price here. Maybe the market went down here, went back here to this high, retraced back to here to this close price here, and then we have here a green short single bar retracement. And the same, of course, is here with the red one. So basically, it's vice versa to that here. So basically, this is the first retracement, what we are talking about. And these retracements, they are interesting for us when they are occurring on one of the previously mentioned indicators. So this means the market reaction on the previously mentioned indicators or tools what we are using, then it's going to be interesting for us. Then there are so-called double bar retracements. Double bar retracement is known maybe to compare it with Japanese candlesticks with a bullish engulfing and bearish engulfing pattern. So what we have here is a down candle with a solid bar with, if possible, short top and bottom tail. So we really have a solid down bar, and then the next bar basically is a solid up bar where also we don't have too much on bottom and top tails. So basically a solid down bar with a solid up bar. And the same, of course, in the short direction. If we are looking for short signals, here we have a solid up bar and a solid down bar. So this is basically the double bar retracement. And we also, and this is a single bar, triple bar retracement. And with the triple bar retracement, it works like this. We have a solid down bar we have a narrow bar in between, and we have a solid up bar. And this is mainly, this is the strongest candle formations, strongest reaction, basically, retracement, because we have here a solid down bar, and then here, it does not matter if this narrow bar is a red one or a green one, here the market just gets tension, okay? So there we have here a down move, then here the market is not sure where to go, and certainly it explodes in a certain direction. So basically here, this is all this tension which has been built up here is just being released in the next bar. And the same, of course, here into the short direction, we have a stronger solid up bar. We have here a narrow bar, doesn't matter if it's green or red, and then we have a red down bar. So basically, these are the three different candle formations, retracement formations we are looking for. Of course, and we also have basically the theory that if you get based on a certain down move, because we are also assuming that before there was a certain down move, the up move won't stop here. So we are, of course, this is a signal for that reason, because we are expecting that the market just goes further in this direction. How far it goes, this is something we try to find out later on. I will explain you later on how this could work. Okay, so basically, the next thing is, which I've already mentioned before, the time frames. Where does location point signals, where do location point signals work, in which time frames? So basically, they are working in intraday in 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, and 4 hours. If you're the 4 hours, I have set into brackets, because the 4 hours just working in 24-hour markets. It means they are giving good signals for the Forex market, which is running for 24 hours, or for the 24 hours index futures, like the ES, like the NQ, like the YM, and so on. So basically, this is just working for 24-hour markets. But if you have a look at the 1 minute, 5 minute, 15 minutes, 30 minute, 1 hour, and if you think about, if you have a look at your watch, then you will see that these are the scalings, the main scalings of your watch. So there is a 1 minute, there is a 5 minute, there is a 15 minute, the 30 minute, and the 1 hour, which are real scalings on your watch. 10 minutes does not work, because this is two times 5 minutes, for example. So this is somehow also comes out from that it seems that still the markets are running from a historical reason, where for a long time ago people just had the simple chance to look onto their watch and to find out when a market is changing, and that the market somehow is still built up on these different time frames. This is just an assumption I found out, just a guess, but it's proven that in these time frames the signals, the retracements are working at the best. And of course, end of day, the time frames are day, week, and month. And if you look at them, so you will see that this trading, this location point trading, is not just something for the intraday traders. It's even something for swing traders, end of day swing traders, or even, since these signals and these reactions are also working for in the weekly and in the monthly chart, it's even something for long-term investors. I will show you later on some examples where you really will see how this is working for weekly, monthly, for daily charts, and something like this. So not just to repeat, it's not only for intraday trading, it's even for finding somehow long-term investment possibilities to really stay for weeks or for months, even years into the market. Okay, so let's start with the first signal, the 20 train signal. So basically, the 20 train signal is called 20 train because it's happening on the SMA 20. For example, it's just a short excerpt of the market, and what you see here is basically just, let's try to read this chart. Is you see here the green line is the SMA 20. We have here a down move. We have here a correction back. And where do you see is the market turning into the short direction again here with a single bar retracement at the SMA 20. Market is going down, going down, going down. On a certain point, there is, most of the time, there is a location point here of another time frame, whatever. The market is changing, going back here. We see here reactions again on location points. What do we see here? We have a gentle correction, a smooth correction back to the SMA 20. And we see here we have a reaction out of the SMA 20. The market is going up, is coming back to the SMA 20 again. What do we see here? We have a reaction out of the SMA 20. Market is going up, 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 up here. We have here a correction going back to the SMA 20. It's not here in this case, it's exactly under SMA 20. In these two cases, it's around the SMA 20. What is important here is that the market needs to close above the SMA 20. So market went down here. We have somehow a smooth correction. I personally would not trade this anymore because we have already a far move here, and the correction is a little bit too strong. But anyway, you see here the correction, and as you see here, the market is reacting, but then it ends. The trend is over somehow here, or at least this move is over here. So basically, 20 train, as we see retracement at the SMA 20, and what needs to be there is we should not see any wide range bars. This is one of the rules, means channel correction. What we see here is this is a wide range bar, okay? And for this reason, I would not trade it anymore. Wide range bar has a certain definition. Too complicated now to explain it. This is something for the detailed education of location point trading. But that you just see here where the reactions of these markets are. So, and this is the next one. This is a so-called Tramp Oline signal. This is basically sideways trend breakout strategy. You should know it's very, I think you already have experienced it for yourself if you try to trade somehow breakouts of sideways ranges. It's quite hard. If, for example, we see here also coming from the history that we have some here a sideways market and so on, and what most of the time is being done here, that you say if the market breaks out here, we are going long. If the market breaks out short, we are going short. Yes, so here you see quite often what happens here. Basically, the market or the sideways line is broken here. So basically, this would be the first signal to go short, and many people are placing here short orders. And of course, if you're placing a short order here, you should place the stop here on the upper range. Yes, so what happens here is basically the market goes back. You are here somehow in a loss. The market is going down here. Maybe you see, okay, now it's really confirmed. Maybe you try to double up your position because you see, okay, the market really goes down here, and suddenly the market goes back. So now here the third attempt to break out here, even those lows are going to be broken, and now you say, okay, now it's really the game. And now I'm fully in. And now suddenly the market corrects here, goes back, and you're ending up here maybe in a big loss. So this is basically, and there is also a statistic statistical calculation of these breakouts, about 72% of breakouts are failing, exactly in this way, like you see here. So, okay, how to do it better? And this is also something for LocationPoint traders, that you have the possibility here to see that the market, in this case, is going to, and we already I've already tried to tell you before, the market is just always going around the SMA 20. So you see here the green line in between, and the market is going down here, it's going up here, it's going down here, going up. So we have a crisscross around the SMA 20 all the time. And this is sometimes at a certain point, this is stopping, and most of the time it's stopping somehow again at the SMA 20. So basically what you see here is the market is going up here, is coming back at the SMA 20, and we have here a reaction out of the SMA 20. So basically this also might somehow sometimes end up in a signal which does not work out, but this is already a good signal that the market might go into the long direction. And what you see here afterwards is that again at the SMA 20 we have a second reaction. And this is basically either this one or this one, and I will show you later on why it's also even interesting to already take the first attempt to go into this direction. But here we have the confirmation, and basically what we can do is here, and this is what I would like to show you later on, the LocationPoint trading, basically whenever it gives the signals, you know exactly where you enter, have the entry order, and where you have the stop order. The entry order and the stop order is always on top of the formation of the retracement. You're setting the entry order on the low, and some distance you are setting the stop order. So you are always only in the risk of one candle. Okay, the same if we would go back to here to the 20 train. You see always also the signal, wherever it comes, we have here the entry order, we have here the stop order. Okay, so the same here in the Tramp Oline. So just to the question how to do it right, as I just mentioned, crisscross, crisscross, crisscross. Up here the market is somehow caught by the SMA 20. We get here a confirmation, so we have two entry possibilities here, and then the market goes up here. Okay, multiple SMA 20 crisscrosses before a short correction to the SMA 20. The best would be if the market goes up here to the Bollinger outer bands, comes back, and then has a reaction. But this is also already quite a good correction back to the SMA 20. There is also a rule. Basically, you should have about 5 to 8 candles back to the SMA 20. Then you see it's a good smooth correction back. Okay. Yes. The retracement estimate SMA 20. So basically this is interesting formation. I just need to say that all the other, because this is quite hard to find out if we are in a sideways market here. Currently we don't have an automated signal. So this is basically something for discretionary trading. When you just see them, the sideways markets, and you watch the market and you see such a formation, then it's something to enter manually. We don't have currently, we cannot provide a automated signal because it's extremely hard to find out such sideways trends. But anyway, this is just that you see again how the market is reacting on the SMA 20. So what stops are we using? The stops are basically explained like this, that we have a soft stop, which I just will explain you later on how it works, which is the SMA 20. So we have the entry signal on the SMA 20, and we have that's the reason why we are using the the SMA 20 as a soft stop. And we are using the hard stop as hard stop, the pivot fast, which is also a default stop in AgenaTrader++. In AgenaTrader Andromeda, you have this pivot fast stop implemented. Also, the 20 trade is also implemented. Okay, so basically, if we are getting a signal here and we are entering, as I've already mentioned here, in we have here the stop, the entry order, and we have here the stop order, which stops you out of the market. So basically, you just see that there is one candle risk you always have in the LocationPoint trading. And the market, if the market turns out to go into the trade direction, you see this dotted line here. This is basically the soft stop. And the line here is the hard stop. What does it mean here? That the market goes up, 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 up. Nothing happens. The market comes down here, okay, and breaks the soft stop. So what happens here at this moment is basically nothing. You're not stopped out because the soft stop is a virtual stop, which is just gives you a reaction of the hard stop by the end of the period. And in this case, you see the hard stop, because it's a pivot fast, and there is nowhere a reaction where a pivot fast stop would have to be moved there. It just breaks here the soft stop, and the hard stop, because the soft stop has been broken, is just moving to the low with a certain distance of the candle which has broken the market. Okay, broken the soft stop, sorry. Here, it turns out that the market decides to go back into this direction. So that means you are still in the trade. What happens here is that the hard stop has just moved closer to the market, because here was a reaction out of the soft stop. The soft stop got broken, and the hard stop is moving to the low of the candle. Or with a certain distance, of course. Then the market goes further. You are still in the trade. Soft stop is running further. What happens here is with this candle here, the soft stop is broken again. Again, the hard stop is moving here, and you are still close, very close to the market. And if the market would decide to go into this direction, you would be still in the market. But here, this candle has broken the hard stop, and so we are out of the trade. So basically, this is how you're handling the 20 train. So there is a pivot fast as a hard stop, and there is a 20 trade, the so-called 20 trade as a soft stop, which is a virtual stop. The soft stops, they are only supported in AgenaTrader. You won't find them anywhere in any other software. So now let's go very, very important in trading, break-even stop. Basically, it's very hard all the time to set a break-even stop. Basically, what the break-even stop does is it sets the trade into a riskless state, more or less. So basically, if we assume that the entry here, the green line, was the entry order, and we had the stop order here, and this is just the rule, because it also does not make sense just to explain you why we are setting the hard stop here just immediately behind that. It does not make sense if this signal does not work out and the market decides to go down. It does not make sense to wait for any reaction lower here, to wait that the market is going up here. Either it works out or you are out of the trade. So either this signal is good for a long move or you are just out. And this makes trading also very easy because you have very straightforward rules. And so here the initial break-even stop would work like this, that as soon as you get here a solid bar which just moves away from the entry, you immediately set the stop to break even, and from this moment on you're relaxed. Nothing can happen anymore. If the market comes back here and stops you out, then it's the same as you would not have been in this trade at all. So it's just the same. So you just, when you set the initial stop, just move it a little bit higher than the entry, that you're not losing any commissions or something like this. So if you really fished out here from any reason, then it does not, you don't have to take care, because if it's there, you can just move to look for other trades. You don't have to watch this trade anymore, because anyway the system is doing everything for you. Okay, so this is break-even stop. It allows you to really set the break-even extremely quick, and after the market has moved 1 or 2 solid bars away from the entry, so if here, for example, if a mid-range bar or 2 solid bars here away from the entry, you are able to just move the hard stop from here to here manually. Okay, so what also is very interesting is the multi-timeframe support. What you also should do is here, you always need to look into higher time frames to confirm your signals. What you see here basically is that we had here an entry because of a triple bar retracement. We see here there is a single bar retracement on the SMA 20. This was a real trade. I went into this trade. I got stopped out. But immediately afterwards, I again had a reaction on the SMA 20, and there I moved in again. And here you see that now it worked out. I went into this trade, and it was also confirmed, because I did it for this reason, because I saw here, because we were here in the 5 minutes, I was here in the 5 minutes chart, I was looking in the 1 hour chart, and I saw here a confirmation out of this reaction here, which is a stairway, and I also saw that there was a reaction out of the SMA 8, SMA 20, out of the higher time frame in 1 hour. Okay, so basically this I made to my advantage, that I was looking into the higher time frame, and I saw, okay, makes sense to get in here, because here I got a reaction. This reaction happened basically on a location point in the higher time frame, and this is the reason why I took this triple bar retracement to get in. And I also saw that on a daily base, we also were on the SMA 20, and we already had a reaction on this. And this was also for me because I got support even from the daily chart. So basically, this trade here I was looking into the 1 hour chart, and I was looking into the daily chart, because I saw support out of these higher time frames. I decided to get in here. Here you see we moved away from the entry. I set the hard stop to break even, and I was out of risk. So I don't have to take care anymore about this trade, because if I'm getting stopped out, I cannot lose anything anymore. And this is the most important thing. Don't lose money in trading. Okay, what you should, so you should obtain entry confirmations from higher time frames, time units, and make sure that the higher time frames are not climatic. Okay, so this should be also, you should have a look at this, that for example the 1 hour, the day is not climatic, because in climatic situation you can experience very sharp back moves. Okay, so basically here this was fine, and I went in. What I also did is that the target search is based also on higher time frames. So I moved in here, and you see here this is the target, and the target I have taken because there was a location point in the 1 hour chart, and I just tried to catch this one, and I set my target here. What you also see here is that the market has moved here, and because I was very close to the target, I just moved I just changed the hard stop to a bar by bar stop to not lose anything anymore, because we are already close to the location point in the higher time frame, and there of course it might be that we are not touch it completely, and you also see the market changed a little bit before here and just went back. And what happened afterwards is the market just went back to this about here and just had the first back move here at this position. So it was a sharp down move afterwards here. So okay, find targets in higher time frames and look also for location point clusters. That means you have a location point here, you have a location point here, and you have a location point here which supports you in entries, but also in targets. So if you find location points also for targets, location point clusters, you should take them where you should place your targets. Okay, so what we have developed for the whole location point support is basically multi-timeframe support. It's the LocationPoint Bed. This is just a bed which is implemented. I will show it later on to you on the site where you also can find the trading beds. What you see here basically that there are the different time frames which are working for the different location point time frames. And what you see here is basically that we are in 5 minutes. And what I did here is I went into 1 hour and I just I'm showing the location point lines out of 1 hour. And as you see here, basically, of course, you can also look into other charts. But to just to help you, basically, you see here different reactions out of higher time frames. So I've switched on all the different location point lines, and you see here there's a reaction coming out of 1 hour, back a reaction to the 1 hour location point line. We have a reaction here on the outer Bollinger Bands and so on. So basically, you see here that again on the EMA 130 there's a reaction. So basically what you can do here is that you can see that these reactions are also coming out of higher time frames basically. And what you can do here is that you also can find entries. Because you have a reaction on a location point of a higher time frame, and you can get into trades in the lower time frames. This is just something also for further education, but you just see how these location points are working in different time frames. And this helps you, this location point bed, to really see them much better than if you would have to look into another chart and to find out how is the market performing there. So basically here you see much more. 1 hour Bollinger Band here, just in the 5 minutes chart. You see here basically free ride. Free ride means if you have space, if you get a signal here, for example in this area, that you can see that, for example, if you would go long, you would have space enough to be able to move at least the initial stop to break even. So there you see, this is just checking if there are some location points coming from higher time frames which would prevent you or would prevent the market to go into these directions. And you see here, for example, this is in the long direction, and here you see this is would be in the short direction. So if you would get a short signal here, the location point bed would tell you don't go short because you have somehow location points in front of you in 30 minutes and even in 5 minutes. Okay? And this is also what we do here is, this is something very, very interesting. This is the heat map. Heat map I will show you also later on, because the heat map tells you where you find sideways markets, in this case in higher time frames. So basically what you see here, if it's green, then basically there is a free ride. There is nothing coming there. There is no sideways trends in the past. Here at this point, and we would have to look into the past here much further, you see, and because this is the heat map of 1 hour, that you see in this area, based on 1 hour, we had a lot of candles in the history. So this might, if you are somehow caught in this, it tells you you should not trade, or you should not find long trades. Maybe in these areas you can find Tramp Olines, or maybe you can find reversals here or here. But this just tells you, and this is also very, very hard to find out, to find sideways markets, and we have here the solution with this heat map. This just came out of the oven today, fully implemented now, that if you press here this, I don't know exactly for which, maybe this might be for 15 minutes because of 1 minute is not checked here, that here you have a heat map, and the heat map just tells you in this area it's quite dangerous to trade. Okay? We'll show you later on. So, and now I'm already almost done with the theoretical part. I just show you the holy grail. This is in trading, and this is order sizing. I just explain you why it is. You see here a chart, and basically what happens here is that, for example, here you have the market is somehow moving, and quite often people say, okay, if the market is exceeding such relative high, such a pivot here, the market, I'm just entering my the entry order here, and my stop order is somewhere here. Let's assume it's here. So basically, what would it mean? You also see the target here. So basically, what you see here is that the entry order you can place about 400 stocks. You can order about 400 stocks based on your risk definitions, because AgenaTrader has already a fully integrated risk and money management. So basically, whatever you do, wherever you move the entry, wherever you move the stop, the order size is automatically calculated. What we have done here is I have entered also a target, which is automatically calculated, but it's calculated as a multiple risk target. That means 2 times the distance from the entry to the stop, you find your target. I just did it for that reason, to just make it visual, what it means to how to say, to work with appropriate order sizes. In this case, it would mean we are risking 129 euros, about 130 euros. We could, we have the entry on 40.23, and we have here the target in 40.99. Okay, here this is the stop at 39.85. Okay, so this would mean we would need quite a long way to reach the first target. Might take days, might take much longer. I don't know how far it goes really, and it's not sure if we're even coming up here to this point. Okay, anyway, so I just need to tell you that LocationPoint trading is quite aggressive trading style. What you see here basically is that in this case we already tried to tighten the entry a little bit more. We are not using this pivot here, we are going for this pivot. And in this case, you see already we don't get 400 anymore, we get 1,000 stocks. But we still have the same risk. But what you see here is we also can achieve the same target value, but it's not on 40.99 anymore, it's on 40.31. Okay, so basically here it's much more possible to reach this level here, this price level. So basically, confirmations of signals improve the signal, basically, or improves the signal, but and also the chance risk relation quite much. But if you are getting into the market much more aggressive, like we should do it in LocationPoint trading, you see entry order above the candle and stop below the candle, you can trade. Of course, it depends how big your account is, but it's just here like an example that you see how it works. That on this very tight entry, you are able to achieve your target already, to reach your target at 40.06, so you don't have to go to 40.31 or even to 40.99 to get your $260 euros approximately. You can get it already at 40.05, and this is why I say this is the holy grail in trading. So basically, because you can really, if you, and this just allows a LocationPoint trading, that you're really, because you're getting into the market extremely tight, and you just have the risk for one candle. And if the market decides to go down, go in the other direction, you lose the same risk. But you have a big chance that the market also goes in this direction when you just got into the market here. But here you have very hard chance to move the stops somewhere else. But here it's very clear. Entry, stop. If the market goes here, you can reach your target very fast. If the market goes back, you're stopped out. But if you see, and this is also what makes it interesting, if you see a target coming from the higher time frame, as I explained before, here at this position, you can reach this position. You can move your initial stop, your break-even stop, extremely fast to that position, and then you are out of risk. And then you have the chance to really reach this one, which is much higher profit possibility than you can make it here or here. So this is just something which also makes LocationPoint trading very, very interesting, because since you're just entering on one candle, you have the possibility to really fully fill up your entries, your entry orders. Good. So basically, we are done with the theoretical part. Let's go a little bit into the explanation how LocationPoint, because we are providing a package for that, and how this LocationPoint package will look like. So basically, what you will see in the LocationPoint workspace is that you see here the different scanners, basically based on 1 day, 1 week, on 1 month, and basically what you can do out of this, you see here the stocks, you see the different futures, you see the different forex. You see here in NASDAQ we are getting signals on a daily base. You see here in forex we are getting signal on a 5-minute base. Okay, what you will get in this workspace is basically, on the one hand, we have prepared this workspace like this, that we have here trending scanner, basically, where you see all the trending signals. That means trending signals are the 20 train, the 8 train, and yes, the 20 train and the 8 train. And as you see here already in this chart, you see here an 8 train which moves quite good into this direction. You see here an 8 train. You see here an 8 train. This 8 train is maybe not to trade anymore, because we are in a far move already here. You see here a 20 train, and you see also the reaction out of this 20 train here. So basically, we can go here to this different. Let's have a look. Just a moment. You also see it, of course, in the short direction. We have here a reaction. This is 8 train. This is a 20 train here. Of course, you also might get here a short signal, but this short signal, because the market did not pick it up, basically this is on a daily base. You are not coming into the trade any here, but here you're getting into the trade on this 20, and the market is just also has a reaction on that. So just that you see how it works. Maybe we find somehow any other. Let's go first one. So you also see here we had here an 8 train which was working out very well, which just moves up here and so on. So basically, yeah. Any other? Let's have a look here. What's going on here? You also see reactions here. Of course, in this you won't get in, because this higher, because the entry order would be here. It would be, at least from here, you would end up here. You just see a move here, and here we have a very good reaction on the 8. We are getting here a signal, and the market moves up here. So basically, these are the trending signals. We also have reversals, where you see also where the reversals are basically the yo-yos and the stairway setups. And you see here that we see some stairways here. We have a reaction here. We have where the market goes up. We have here a short stairway. We have here a long stairway. So really, this finds very good signal. Also, we see here, at least here, we get a signal. Look at this one here. We're getting a signal here, and market goes up here. We are getting a signal here. At least the market has a reaction, and you are able somehow maybe to set at least the break-even stop to here. Maybe you're closing in already in advance when you see the market is reacting here on this location point. You see here a reaction. The market goes up here. So basically, these are maybe we find some other good signals. Look at this here, where we're getting the signal where the market goes. So really, this reversal, the yo-yos and the stairways, they are really giving extremely good signals. We have here, for example, where you should be careful. This is just something, if the market trends up so extremely strong and you get a short signal, you should be careful to trade it, okay? This is just something where you better not trade these signals. You might get into this direction, but you might end up that you're stopped out. So just that you know, not every signal is a winner, but many of them are really going, at least you see reactions here where you're able to set your stop to break even. Okay, so these are the reversals, and we also have some wipeouts here. I just look for signals where we are getting them. Strange, just a moment. Maybe I did not enter them. Okay. Okay, good. Now they are there. A wipeout basically is somehow to just explain you how it works. Like here, the market is moving basically into this direction. This is not a good example. Maybe we find some other. Here we find a better one. So basically what happens here is the market is moving into this direction. You get into a solid move, basically a narrow bar as a correction. At this moment, it's always hard to get into such a move because where you're setting the entry, where you're setting the stop. But here you have the possibility to set the entry here, to set the stop here. If you are getting into the market, basically you see here what might come out into this move. So basically you get, based on this candle, you get a signal. You're stopped in, and basically then you can trade this move here with a very, very tight stop. Basically, this is also something what you see in what you get in the location point package. Here you also see something like this, where you see a similar situation where you can at least take this move. And since you are the entry is so tight, you have the chance risk reward is quite high also with a short move. Okay, so basically this is like it is. What you also get, basically here you see the location point bed, already short explained how it works. This free ride, for example, to just see you are here in the daily chart, and basically the system tells us if you would get in now, if you would get a signal for any reasons in the moment, you would have a free ride into the long direction. So nothing prevents you to go there, that you are at least able to set your initial stop to break even. Here we are calculating the short, and you see, for example, in 1 week, if you would go short, you would have somehow the Bollinger Band, or is it the SMA 8, would prevent you to get in, or would just tell you, be careful, there are location points from the higher time frame. You can show the heat map. Basically, we are here. We are showing here the heat map, and based on the heat map, you see that that we are here in this area. This is red, so we have a sideways trend, but we also have a sideways trend here coming from here. And you see here there is this area. Basically, it's calculated exponential. That means, of course, then later the newer candles are more relevant than older candles. What you also can do is you can go higher, into a higher time frame. For example, let's go into a week, and let's just find out how it looks like in a week. And you see here in a week, this sideways trend is not really that relevant, and you find some possible areas here in this direction based on a weekly calculation. So this shows you in higher time frames where you can come into dangerous areas where it's not better not to trade. Okay, this is extremely unique in the LocationPoint package. You see also here that the weekly calculation, it's always going back into the history, and of course this is a longer, which you won't see in the daily anymore, but because this is the weekly, you see here this is the week, so it's really calculating everything, this whole move here out of the week to get this heat map, this market heat map. Good. What else you will get in this package is the so-called dynamic scanner. You're getting many signals out of the different scanners here, okay? And it's always hard to find them in the right moment, even if you're trading in 5 minutes. The dynamic scanner, what this is doing is basically, I just sort it properly. This is going to be done automatically. So basically what you see here is that the market, basically you're in a dynamic scanner. And what you see here is you just see signals. You don't have to go there and try to find out where is a signal, or in Forex where is a signal, do we have any signals, can I trade it? What you can do here is in the dynamic scanner, you just wait until the next candle breaks basically, or the next period breaks. And as soon as it breaks, you get a signal here. Here we are on 5 minutes, for example, and you see here that we got a stairway pattern basically here with this candle. So basically what you can do is you see the different signals in the 1 days, in the 1 week chart. So if you, for example, would like to have a look in the 1 weekly chart, you just drag and drop it over here, and you see that you have got a moment. This one here basically was a signal because this is in the past, and you see also historical signals based on no, sorry, here we are. So okay, this one, we are in a week, okay, and you see here this candle gave a signal on a weekly base, okay. So this is just something, and if you look here on Cisco, for example, you drag and drop it over, you see that we got a signal 1 candle ago, but we did not get into this trade because basically we got the signal here, it seems, yes. So here is also, there's a 20 trend, you see there is a signal here in this, on this position here, basically. So this is just something where you don't have to look into different, different scanners, you just get them whenever they are occurring. Makes it quite easy to trade. Okay. Here you see already the reaction, stairway pattern, and goes into this direction on a 5 minute space. Good. So basically, I think I've showed you everything what you will get out of this LocationPoint package. I think I did not forget anything. I've recorded this this video. I just would like to show you what you can get out. So basically, what you get is, we are charging for the package itself, it will cost 1,490 euros. You get the conditions, which I've shown to you, this 6, 7 different conditions. You get the functionality of the LocationPoint Bed, you get the dynamic scanner, and you get the heat map, which is new, which is even not here in this mentioned there. You get a 50-page handbook. And what you also get is a 3 month free membership in our protected Traders Yard Location Point group, just to make you aware about Traders Yard. I don't know if you have already seen Traders Yard. Traders Yard is, we are just building up a worldwide trading network. Okay, so I'm not able to log in because I have no login data now here, unfortunately. But basically, just log into Traders Yard here on tradersyard.com, and here you will find already quite many users who are posting their trades, who are giving a lot of information, and so on, and you can be part of this. This is free of cost, but what we also do in this location, in this Traders Yard, is we have a conferencing. We have live rooms in there in Traders Yard, like you know from GoToWebinar or from WebEx or something like this, but we have it under our control. And this also means that you get access in a 3 month free access membership into a Traders Yard Location Point group, where we are commenting the markets, where we give some more information about how to understand where you, trades, where you can ask questions and we are answering them, and so on. So basically, this is everything included in the 1490. What we are also doing is we are just in creating. This is going to be ready, I think, by end of the month or start of next month. We are creating a 10 hours online trading course, which tells you everything about location point trading, how to interpret the different signals and stuff like this. There are quizzes and exams where you can really find out if you have understood location point trading and stuff like this. You will get a final certificate out of this online trading course. And what we're also doing is, so this is really at least 10 hours that we're doing, basically maybe more. And a combi offer is if you buy the online course and the package, you will get a €300 discount. What also means if you first buy the location point package and then later on the online training course, you will get the €300 discount on the online trading course. So this is basically our offer for Location Point. I'm just trying to ask you if there are some more questions there. Okay, the question is, does location point trading work on all different time frames, including intraday time frames? Yes, I think I have explained it before. This is working in the 1, 5, 15, 30 minute time frame, 1 hour, 4 hour just for the 24-hour markets, and day, week, and month. Yes, it seems there are not many more questions here, so it seems I have everything explained quite well so far. Yes, there are still some listeners here. Many thanks for joining this webinar. I hope I have given you some information, even that you have seen that there are some trading possibilities which you might not have seen so far, which you would not have reflected until this webinar. So I hope I also gave you some training, some additional information. If you are interested to in the package, it will be in the shop from 9th of October on. We already wanted to provide it a little bit before, but we just got out the latest developments today, so we need to test it if the heat map works properly. And yes, and if as soon as it's ready, so it seems Monday 9th of October, we are gonna provide this package for our customers. So if there are no questions anymore, I would like to say thank you very much for your attention. Yes, I think you will hear quite a lot of LocationPoint trading from us in future. Yes, and if you would decide to buy the package to get the online training or whatever, I would like to see you there. I would like to see you in the protected Traders Yard LocationPoint group. Yes, to welcome you there and to give you some further information and detailed information how you really should can understand LocationPoint trading. So many thanks to all of you. I wish you a nice evening, good night, good afternoon, and see you soon in our further LocationPoint webinar or in the Traders Yard LocationPoint group. Many thanks. Goodbye, guys.